Hello, folks. Brandon Chapman with you today. It's another edition of the Monday video for TheoTrade. It's October 7th, 2024. It's a year since the tragedy that happened in Israel, among other things that have gone on ever since. It seems like, man, we just can't seem to break free. But I'll tell you, this concept of breaking free also extends to the market right now. As we look at things, this range, we see a 57.25 to the left of me, 58.25 to the right of me. You guys know that song. Jokers left me. But anyway, the point being is that the market's been trading in a $100 range for quite some time now, since we had the big update on the 19th of September. And so we're kind of in this mode of saying, hey, we're just thinking about it. Although today we're down, we were down nearly 1%, 0.9% in the SPY today. We're still thinking about, are we going to break up or are we going to break down? So many thoughts, and we're less than 100 points from the all-time high close, and yet look at the VIX. Look at the VIX. Dun, 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 whatever. The VIX is up to 22 right now. I mean, this is really interesting, right? We're less than 100 points from the high. The VIX is ramping. We're at 22.5 today. Where's the sell-off? Where's the panic? Well, look at what we got. We have rising VIX and a stalled market. Can this be good? What the market's saying is that we're expecting volatility to increase. Look at product depth here. We'll bring up /VX. We'll look at the VIX futures. And what we want to see is that, are we in backwardation? Are we in contango? Look at that. That's way down here at 1. That's a data issue. But essentially, if we looked at this earlier today, without the data problem, this was declining right here. We have backwardation in VIX futures. Yeah, here we go right here. Backwardation in VIX futures. Look at the markets over here, the charts. VIX3M plus VIX. This is where it gets really interesting. Today, the 3-month VIX fell below the 30-day VIX. I mean, normally, this 0.99, I'd say, hey, that's kind of bullish, right? We're seeing volatility expectations expected to decline in the future. Since the 3-month VIX is now less than the 30-day VIX, the VIX is in backwardation. Here's the only problem. We've seen this continued kind of ramping up, and we got this back here, for example, in late July, where the market and the VIX started getting backwardation early. And guess what? It didn't really bode well, right? The market saw further downside as we went from 55 down to a low of 51. If we go back to that volatility chart again, the 3-month VIX to 1-month VIX. See if I can type here. Plus VIX. We were recently, as early as 9/25, September 25th, we were above 1.2. And guess what? As the VIX term structure's flattening out, where near-term futures are the same as further out futures, right? As the 3-month is virtually equal to the 1-month. As we look at this, guess what skew is doing? Skew is coming off an all-time high of 171. Yesterday or Friday, last week, we finished at 156. Skew is still massively high, right? We're touching areas on the skew that we've rarely ever seen. Most of them recently above 156. All this says is that the tail risks are preeminent in the market. And what does the S&P 500 do? We're just grinding it out in a 100-point range. So the point is this, right? There's a lot packed in this very small range from a volatility perspective. And what's going to happen is something is going to change, and it could create violent movement. Now, the skew certainly says, hey, the downside risks are preeminent. We're coming off levels we've just never seen in skew that suggest the downside risks are massive. And so what happens here, if we break to the upside, does that mean the skew's right? And we just see further grind, and then the downside risks start to manifest themselves later, maybe? There's a lot of uncertainty that's going on right now. But we look across the spectrum, across the sectors today, you'll see the only thing positive today is energy. And why? Well, let's look at CL, /CL. Where are you? Oil is up nearly 4% today. You see 3.89%. We're breaking to 77. We've got a CPI report coming up at the end of the week on Thursday. Where were we in September, right? Just go back here. I mean, oil prices were perpetually below 72, right? So all of a sudden we look at the headline number on CPI, you would expect that those lower oil prices are going to be reflected in that report, and maybe it holds it back a little bit. Meanwhile, over the last 5 days, we've seen huge breakouts in oil, right? We saw a breakout here specifically on Thursday and the continuation on Friday, and then a big move again today. Well, why? I mean, shoot, we've got storm, we've got Milton about to hit Florida, we've got geopolitical risk. I mean, again, Israel getting shelled. I mean, what's going to happen in the Middle East? We have war in Ukraine, for example. All this stuff going on right now. The geopolitical risk and oil supplies. Well, let's take a look here. Oil supplies are very tight, right? In fact, we are basically treading or scraping the bottom here in terms of inventory in oil. Notice this right here. We ticked up last week a little bit of a build, and now we're at the 5-year low, right? I mean, we've got no oil in reserve right now, and all this stuff going on, and what's about to happen in terms of inventories next week. What's going to be shut down from a production standpoint in the Gulf or beyond? The reality is we have very significant issues that create inflation, namely just because we're just scraping the bottom of Cushing's barrel in terms of oil supply. And oil right now is making a big move. And this is something that last Wednesday in my session, I kind of walked through a number of different energy trades based on unusual option activity in the expectation that the risk is to the upside in oil. Well, how do I know that? Well, look right here, /VX. The reason why this is different, we're in backwardation in oil right now, right? The reason why this is different than the VIX is because oil has to be stored. It has to be financed, right? You can lease it out. The net cost of carry right now for oil is positive, meaning there's a shortage out here in the future, and it's causing the near-term price to be the highest in the range. And what's going to happen is the exact opposite with regards to the VIX. We're expecting these forward prices to converge with the spot price and continue to put bullish pressure on oil prices. And that's what exactly we're seeing here, right? As the backwardation is driving the risk to the upside. So we're kind of seeing just kind of crawling over down, and we're seeing the explosion of the upside right now in oil prices with all this stuff going on around it. And so again, looking at energy, well, guess what? Rising energy has a very direct impact on stuff like, for example, utilities, right? Utilities use oil and other energy sources to create power. We have this very steady kind of trend in XLU. And we saw things begin to see kind of trend down a little bit on Friday. And in fact, I just started a mastermind on in-out spreads on Thursday. And on Friday, I posted a Loom video for those in that mastermind, illustrating, hey, here's a potential opportunity doing an in-out spread in XLU. That trades up nicely today. As a result of what? As a result of the move that we're seeing. And the cost was around 82 cents. It's going for about $1.41 today, just because of this move. Probably should have closed it out. I didn't. Getting a little greedy maybe. But the point is that, again, further downside, again, the hurricane. Well, guess what? Look what's going on here with NextEra Energy, which is a very specific exposure to Florida, right? What's going to happen here in terms of costs and other things? Big breakout. So again, rising oil prices has a direct effect. Well, what about staples, right? I mean, anything to pull anything out of the ground, right? Or to the energy used to potentially to convert, to process food. Well, again, XLP specific exposure down 1%. So we can see again, the performance across the board was weak today. Again, the best performers were industrials. It was energy was positive, and gold. Well, gold is hanging out at the moment, right? We're still consolidating. We're still in the range. Again, I'm expecting gold and silver to break out to the upside. We tried to break out on Friday in SLV, didn't come in. We got a 30-32 spread that we're watching in my session here, expecting upside breakout by November. But here is the risks, right? What happens if all of a sudden this energy push, right, this rising price of oil starts to break the back of the market and we start to see a downside breakout? Again, this is what the market's been pricing in since mid-September, going back here, for example. And what if we start to realize the downside potential of the S&P? Again, this is where the dollar may strengthen, gold may sell off, but gold should outperform the S&P in that circumstance. Okay? The breakdown in utilities today, I talked about it during my Friday session about how the breakdown in utilities may happen this week because utilities continue to push. And if we look at a ratio of SPY to XLU, so we're kind of looking for this transition towards maybe looking to put money back into the S&P away from XLU as kind of a binary type trade. Well, guess what? We may be seeing that 4-week rate of change if XLU continues this pace. If you go back 4 weeks, we're seeing we're now at a 4-week high in this relative strength chart on this yellow line. So we may see that rotation back to SPY, but it may occur at a time where there is some weakness. We talked about on Friday about if you stick with this XLU, but be hedged. We walk through a potential hedge you could use to reduce the downside risk this week in XLU. Just the thought process is that XLU at some point has got to start to break to the downside, and we got to see some degree of retracement off of our highs here. And that may dovetail with a broader market sell-off, because the fact of the matter is, as you go across the board, higher oil prices does not help profits in everything except for energy. And as we see XLE even just eking out a smallish gain today, 0.35%, but it's had a nice little run over the course of the last week. And so now, again, it just needs a little bit more for some of the trades that I've talked about in my sessions to get it, to be able to get out of it. But again, it's, we just need a little more push. But the reality is, the way the market's tipping right now, again, the downside break may be real. Today's volume in the ES futures, for example, ultimately end up finishing relatively light, which normally happens during consolidation. So at some point, we're going to see a resolution or the finality of this 100-point range. Either we kind of go through the upside with a whimper and grind with a high skew, or we see more of a precipitous downside break in the S&P 500. So when you think about those two potential solutions to or resolutions to this range, where do you want to be right now? Do you want to be heavily long if the skew's telling you if we do break, it's going to be relatively tepid and grind higher if we get an upside breakout? And if we break to the downside, we see big downside move. At this stage, it just says what? Keep your powder dry, right? Keep something in reserve to deploy, to limit risk to the downside, and then deploy. If we break out and grind to the upside, maybe we start to see something manifest itself as an opportunity. Now, in today's option activity trade, we talked about an MGM. So again, this is part of that China trade that's continuing to move. MGM up 1.66% today. FXI up 2.74%. ASHR. We kind of look to close and roll some of these. We have some stragglers in MGM and FXI. Unfortunately, ASHR took off today up 8%. We talked about kind of taking off ASHR because we hit the profit target rather than rolling, because man, this powder keg, this parabolic move at some point is going to start to crumble. Okay. But today's trade certainly places, again, continued interest in this area. So we talked about XLP as a bearish opportunity, just trading just out of the money here, looking at probably like a downside move to 79, maybe 78 as a spread trade. But also, again, let's think about gold. Let's think about Bitcoin. Well, guess what? Bitcoin today was higher, up 1%, did fade from the high a little bit. We talked about during my session about Riot. Riot exactly didn't hold up here, but we are seeing what? A neutral candle with higher volume. Again, this shows a lot of compression and a potential break. If we start to take out today's high at around 855, we could see a big move here. Why? Well, Riot, generally speaking, has pretty high short interest. This creates a short squeeze. So looking at the trade today in Riot, they're buying 11 and selling 14 calls for November. And again, am I expecting Riot to get up here? Maybe. Again, this is a stock that frequently sees very big moves on a short squeeze. And again, we're seeing option activity. That gamma squeeze leading to a short squeeze may propel it there. But guess what? You don't have to necessarily take that kind of risk, right? Or that kind of lower probability scenario. You could go closer here. A 9 and 11, just go buy deep and wide, 1-month, 2-strike vertical. Again, though, you're buying a 1% vol, selling 107, heavy skew here. It's a really cheap spread at 39 cents. And where's the profitability need to be achieved? Again, you get north of 11. So if we get any sort of squeeze here, a retest the prior high, risk 39 to make a $1.61 if you held it to expiration, but probably looking to sell it, probably close to $1, get over 100% return if we get any sort of upside break here. So again, Riot's kind of holding on because let's think about this, right? Inflation, higher energy prices doesn't necessarily create an environment where the dollar is going to crumble other than what? Again, if we're starting to perceive weaknesses, the Fed go back to the trough, they go back to printing money. So we go back, if we're starting to tilt the other way towards cutting more aggressively and weakening the dollar. And that's precisely a circumstance that can fuel a big move in some of these products like Riot and gold and silver, Bitcoin, etc. And if Bitcoin moves, this does help Riot, again, as the shorts get squeezed to push higher. Well, let's confirm whether or not Riot does have some high short interest. So if we just go to Yahoo Finance here, for example, just go to statistics, scroll down to the bottom, 16% of the float is shorted. The short ratio is not super high at 3, normally 5 is a threshold, but again, very high short interest of the float. The float is 279 million, 16% of those are shorted, 48 million shares. So again, if we start to see some covering, this can have a very significant impact. And so if Bitcoin starts to make a move, we're going to see Riot start to make a move, and it's going to start to see the dominoes fall as the gamma squeeze turns to a short squeeze. Can we get to 14? No idea. 11's a little bit more likely, but you can structure any sort of trade in here because of the positive skew in Riot. So I want to throw that one out. But on the bearish side, rising interest rates, TNX, CGI, so we're looking at the 10-year treasury yield. We're seeing a breakout here. We're north of 4%. Where's the 30-year right now? Let's go TYX. TYX is at 4.3%. So we're seeing the yield curve is now, it's uninverted, right? We're seeing yields rise in the longer term. So we flip this to FVX. So we'll see where the 5-year treasury yield is, FVX. Again, where are we at? 3.8%. So we're seeing a positive term structure as we got to 5 to 30 year, and the Fed is about to solve the 3-month the 3-month crisis here. It's at 4.5%. Fed cuts 25.50. It's going to drop it here. We're very, very close to seeing the entire treasury curve uninvert if they start to cut 25 or 50 or 75 by the end of the year. And it's not hard to see what's going to happen in terms of what the expectations are. Just look at the CME Fed Watch tool. Let me close this out. This is the November meeting. We're now pricing in what? We're now pricing in 4.5%. Where are we currently? 4.75. Look what's happening here, folks. Now you now have a 15% chance they don't cut at all. So now what have we done? We've gone from basically last week, we had a 53% probability of a 50 basis point cut to now all of a sudden we have a 15% chance of no cut. We look at December, right? Looking at December, we're saying, okay, we've got an 80 plus 7. That's an 87% probability. They cut 50 by December's meeting. So maybe 25 in November, 25 in December. That gets us down to 4.25%. We're currently 4.75. Do you realize that it was just a week or two ago we're pricing in 75 per basis points of not even a 1% cut by the end of the year, 1.25% cut total by the end of the year. Now all of a sudden we're looking at what? Maybe 4.25. Okay, we're basically, that's a 1% cut. We've really backed off the rate cuts. We have inflation data coming in this week. There's potential for something big to happen. But all of a sudden, 3-month T-bills were pricing in greater than a 75 basis point cut by the end. Sorry, it's at 5.25. We're down to 4.75%. We were pricing in 50 basis points soon by November's meeting. We're seeing that back off right now as yields are starting to rise here. Fed still expected to cut 75 basis points by the end of the year to get us down to, it's 50 basis points by the end of the year instead of 75. And so we'll see what happens. Again, inflation and oil is sitting right at the center of all of this, being undersupplied with geopolitical risks. So again, if anything, you can see if we start to break to the downside, if inflation comes in hotter than expected, a lot of stuff could happen and a lot of downside move can happen. So again, just sit back and watch the show right now. Wait for something to happen. Consider being long energy. Consider beginning to take profits in the Chinese space as we're accelerating there. Look for bearish opportunities in things like utilities and staples, and it'll start in REITs as well as things begin to turn there. Bearish option activity in IYR today, bearish option activity in XLP, in NLY, which is a REIT. We talked about this in my session earlier today. So again, a lot of risk right now on the table. Just be respectful of that possibility. Again, there's a lot of stuff that could really move the market. So just be in a smaller position right now, smaller footprint, higher cash levels, and consider, and again, with VIX at 22 right now, it's hard to be hedged or put on a hedge unless you already have it with the higher volatility levels. Anyway, folks, we'll catch you back next week in the video. And have a great one. We'll see you then. Thanks.